Welcome back to the exchange. The S&P 500, pretty impressive, up 8% this year, but European stocks are up even more. The stock 600 up more than 10%, and the luxury sector in particular has been crushing it. Hermes up 44% year to date, LVMH 33%, Richemont, I hope I'm saying all this right, up 26%. And LVMH is now the first European company to surpass $500 billion in market cap. If you combine it with Hermes, by the way, their combined market share equals Berkshire's. But one technician says now is the time to start taking profits after LVMH's big run. Joining me is Carter Worth. He's CEO of Worth Charting, along with our very own Robert Frank. And Carter, before we get to the charts, Robert, let's look at how we got here. And by the way, we've now seen, Carrier bidding for a German company. And earlier we heard about the European bottlers are doing so well. So there seems to be this European strength.
Yeah, and that European strength highly concentrated on those top luxury brands, especially LVMH. This is a company whose stock is up by a third this year. It's up 70% since September of last year. Most of that is the China reopening and the hopes for that. But the real secret to success for LVMH is its diversification, not just the 75 brands that it owns. 75 maisons now, from Sephora to Dom Perignon to Fendi to Louis Vuitton to Dior, but also the geographic diversity. So now we're seeing a little bit of cooling in the U.S., but China is kicking in, and that's been the reverse of what we've seen for the past 2 years. So, we could see a slowdown this year from the incredible growth that we had in 2021 and 2022, but if anyone owns this space and is going to be the most stable, it's going to be LVMH.
And yet, Carter, you think this trade's gotten a little ahead of itself?
Well, remember, it's also others. I mean, Ferrari, it's other luxury goods. But if you look at it compared to maybe some comparables like Estee Lauder, which has kept pace with these until of late, or L'Oreal and some others, these two, LVMH and Hermes, are sort of unto themselves. And it's not about a long-term view. It's just about sequencing. At some point, the day-to-day, week-over-week angle of the line is just too steep. Just as things can get overdone to the downside, so bad it's good, of course, you can have the reciprocal. Who's the incremental buyer? Everyone loves them. Every analyst has raised their price target. Take some money off.
And yet, Robert, that performance over the past decade is impressive. It'd be like, I don't know at what point. So if we compare them to NVIDIA and we say, okay, well, when should you have not bought NVIDIA? 2016, 2017, 2018, 2019? I mean, at some point, the people who have a proven track record just have a proven track record.
Yeah, and look, Carter's a great chartist, and I would say people have been calling for a decline in growth at LVMH for over a year, expecting that recession at the high end to happen, and it hasn't happened. Those folks at the high end, whether it's in the U.S. or overseas, are the least impacted by inflation. That spending has not slowed down. We're seeing it for Ferrari, we're seeing it with watches, we're seeing it with art, we're seeing it with high-end real estate. And so if you look at the margins and the growth, they doubled what the analysts expected in the most recent quarter. They were expecting 8%, they got 17.
Wow. And yet we also saw, the French storming their headquarters after that strong report. So, Carter, I take your point. When we can't find anything bad to say about it, we often have turning points like that. Why did you compare him to Berkshire in particular? I loved that. Sure,
that was kind of fun. Well, so the report was done, obviously, all Sunday, and then it was kind of nice to have these headlines hit that LVMH has now crossed the $500 billion. But perchance, if you plot these two stocks as a basket, as an equal weight basket, while they're very correlated, you can look at them relative to other assets, not only to the stock 600, but their combined market cap, perchance, is almost identical to Berkshire. And obviously, we did a poll for institutional clients as well as individuals. Which would you rather as an investment between now and year end? It's overwhelmingly Berkshire now, probably valuation-wise, because people know, right, that on a price-to-sales basis, Berkshire's trading at 24 and the basket's trading at 7.3, or price-to-earnings 23 versus 38. Or it's just people looking at the chart and saying, you know what, it's great, I love it, I'm in for 10 years, but I think day-to-day I should reduce, trim, hedge, do something.
I got bad news for you. That's your buyers. If your own poll says they'd rather own Berkshire, then LVMH maybe have a little bit.
We shall see.
Carter, thanks very much for your time today. Carter Worth and our Robert Frank.